I wanted to ask Adam before he left, being our resident Canadian, that we had a nice little correction, breakdown in USDCAD this week after we finally got that one last push to new highs. I think we could recover, but I'm leaning towards selling retracements in USDCAD and perhaps your view on it. You have some levels to share with us?
Yeah, I mean, I really like the 132. I know we're back down touch below it again, and I almost like these levels as a spot to buy. We didn't mention seasonals. If we take a quick look, it's not a huge month for seasonals, so I'll just touch on it briefly. But it's a poor month for dollar CAD, not the poorest. I mean, it's one of the poor-ish months, but it's a very weak month again for oil. And I think whenever you get these hurricane-related spikes, I think it's an amazing opportunity to sell crude. If you look at storage in the United States, right now we're at the bottom of the year, traditionally bottoms crude oil inventories right now, and we're at the lowest we've been in a few months, but we're still above any other point in any other year for 15 years. So there's so much of the bottom here is higher than the old highs. You know, even if that were a chart, you'd say you buy here, and that means sell crude.
And the weaker dollar isn't helping it today, Adam. I'm looking at the oil chart right now. It's selling off. Yeah,
it's been a rocky trade, and I think you have to be opportunistic in oil, and that I think will ultimately weigh on CAD. And in the very near future, there's an election in Canada on October 19th. Now, I always say that Western elections, any developed country elections, are overrated because there's no such thing as political gridlock in these places, and it doesn't even matter if there is for the economy. Oftentimes, but there may be a little bit of jitters ahead of that because it's a very tight three-way race, and that could weigh on the Canadian dollar. And on the flip side, if you want to take out some of the risks related to emerging markets and growth and the United States, is the Australian dollar. October is the best month of the year for the Australian dollar. So that creates a bit of a skew in an odd CAD trade. If you take out 2008 over the last 15 years. 2008 was an exceptional year, and the Australian dollar got absolutely obliterated in October, same as everything else in 2008. It averages about a 2% gain per year. So seasonally, it's a good trade for odd CAD on the long side, and the Australian dollar has been very badly beaten up. So is the Canadian dollar, but and I think the caveat is watch the RBA, because there was a story out overnight talking about them investigating the possibility for more cuts, but there's also fresh talk about PBOC action, so Chinese central bank cuts, and that could give a little bit of a lift to the Australian dollar relative to the Canadian dollar.
I would, if I was a Canadian citizen, I would write in Adam Button for Prime Minister.
The campaign.